What's going on, buddy? Jeff here. Welcome back to the channel. All right, guys, we are finally breaking out of this 17-day range-bound chop. Okay, that the market has just been bouncing, ping-ponging back in between, slowly looking like it's going to break out to the upside, only to be a liquidity grab and rip you all the way right back down. Same thing happening to the downside. Is this going to happen on a much bigger time frame? Now, as you can see right here, there's a massive red daily candle showing that QQQ closed at 310. But here we are, this blue line sitting, that QQQ is almost at 313, up almost a full percent after hours due to Microsoft beating on their quarter 3 earnings. Now, guys, this is quarter 3 of their fiscal year, which runs from July to June. Okay, so that's why you're seeing quarter 3 and not quarter 1. Now, they did beat on both top line and bottom line. People did reach out to me saying, Jeff, how come Microsoft stock is skyrocketing even though they are down year over year? Well, let me just break that down for you guys really quickly. And then later on in this video, I'm going to get into a solid setup for you guys that you can play every single day. But what happened in 2020 and 2021, you had the market just continuing to rise. Okay. And these companies were sitting at a price earnings ratio of something that was just unsustainable. And what would happen was investors, they didn't want you only to crush the quarter that you're reporting on. They wanted monstrous guidance. And when some of these companies were reporting these monstrous beats, they wanted that same percentage gain going forward. And you watch companies beat on the top line, beat on the bottom line, show that there was going to be an increase in guidance. But that increase in guidance, let's say, was only a 10% gain, and they wanted a 20-25% gain, and the stock would plummet. And people would be like, oh my God, I don't understand. The company's reporting great earnings and so forth. Even their guidance was good, but the stock is down. Well, we're seeing the inverse now. Right? So in 2022, they said, listen, rate hikes are going to affect us. Demand destruction is going to affect us. And everything that's changing in the economy and the financial world is going to affect us. Market pulled all the way back down. SPY got down to 350. You know, a lot of these big tech companies were getting hit really hard. Then they got to a point of saying, listen, things are not getting worse. Okay. And they started to lower the bar, and investors and analysts, that bar was being very low. And that's kind of where we're sitting as of right now. So it's very normal for a lot of these companies to continue to, showing that they're beating top line, bottom line, all these estimates and expectations, while some of their year over year or even quarter over quarter is a little bit skewed. So just keep that in mind going forward. Okay. So Microsoft, they did report really well. The entire market slowly sold off all day long, and that was really due to First Republic, once again, news dropping that they're going to be looking up to selling $100 billion in assets. A lot of that would be mortgage-backed securities in order to maintain their credit rating. Now, First Republic Bank, okay, is down from $220 a share in November all the way to $8 as of right now. They reported earnings yesterday, and they're continuing to struggle among many other banks. Okay, there's a lot more banks that are struggling that actually the media is portraying. Okay, just some of these banks are a little bit larger. Obviously, SVB was a very large one, so that had a lot of media attention, but that brought the market down a little bit. Investors get a little bit eerie. Okay, so guys, I will just mention this. We do have the core PCE, which is set to come out this Friday. Okay, the core PCE is personal consumption expenditure. This is the Federal Reserve's preferred gauge on inflation. The forecast actually shows that we might see an uptick. We've seen a decrease in of the CPI for quite some time. Okay, and that really, I believe it has to just, really just show with the way that they calculate it, especially as energy is kind of pulling everything down. But like I said, hopefully the core PCE will just shine a little bit of light on more accurate numbers for inflation. So keep that in mind for Friday. Now let's get into the chart. So first of all, this is QQQ. This was actually the algorithm that is going to be released, guys, probably within the next week and a half or so. I'm really trying to iron out just some last minute things for everybody. But we had 3 nice shorts that were triggered. Okay, even if you look on SPY, it was actually the same thing. I think there's 3 shorts caught that short right before the dump. Did try this long right here. All right, as I believe, I think the futures ES was sitting at 4,100. Nice opportunity for a risk reward. Couldn't do it. Tried to do a double bounce. You could take a small loss or potentially even a break even trade. But one thing I want to point out to you guys, and I say this to you all the time, it's the pre-market break and retest. Okay, you have some tight consolidation as we see right here. If you see the massive chop, okay, where these huge candles, it's kind of like, I like to stay away from it. But when you see this range bound where it's pretty tight, and when you're talking about SPY, which is sitting at $410 a share, a 50 to 60 point range is fairly tight. Okay, so just keep that in perspective when you're looking for a specific dollar amount. Okay, same thing with QQQ, over $300. It's sitting at between a 50 to 60%. And you can see, guys, you snap a line to kind of where we are, almost at a high where price has been bouncing off of, 1, 2, 3 times. And the same thing with the low. You've got 1, 2, 3, even 4 times as of right here. We do have a little bit of this kind of breakdown really, really early on, 4 o'clock in the morning, where you can draw that line. Obviously, it just showed us a little bit stronger right here. You snap your line up top, you snap your line up low, you wait for the first break, you never buy that first break, and you look for the rejection, okay? You're always buying on the pullback. You never want to buy anything extended, okay? When you buy something extended, you're chasing, it's FOMO, okay? And if the trade does go against you, because that is a normal part of trading, okay, the percentage you're going to lose is going to be greater than when you buy on a pullback. Now, if you had taken this on the pullback somewhere up here and it did rip up higher, well, your loss was only going to be, let's say, whatever fit, depending on if you're playing, contracts or playing equities, it would have been, let's say, 50 to 60 cents versus if you're buying all the way down here, well, now you got $1.30 of a loss. Translate that into options, and that it could be a realm of different percentages depending on what you're playing. If you're playing far out of the money, if you're playing, same day expiration, if you're playing, 7-day expiration, obviously that is, wildly changing. But just remember that if you're looking to try to play something, check it out. It's a pre-market break and retest. I've been playing it for quite some time, guys. This setup does not happen every single day, obviously on SPY or QQQ. I want to say it happens every single day on at least, some multiple tickers. I only play really probably about 10 different tickers. They're very liquid. I'm sure you guys have seen me mention them for quite some time. All of them have this algorithm built into them that will be released to you guys in a very short period of time. But like I said, if you're looking, guys, check us out. And guess what? If you don't get that set up, then there you go. It's very simple. You don't take a trade. So guys, that's it for this video. See you in the next one.